Good morning, everybody. Welcome here to the Sunday morning. I have Anthony Venuto on this show with us. Anthony, welcome.
Thank you for having me, Santo.
Anthony, I forgot to say, Anthony is with InTouch Mortgage Solutions, and today we're talking the world of financing. I know it kind of sounds boring, but we're going to get into some interesting stuff here. Anthony, interest rates are lower now. I don't know about you, but so I'm going to ask, are you seeing a massive influx now of people applying for pre-approvals because they're ready to buy now with the new interest rate?
Santo, good point. Yes, interest rates have definitely come down over the last little while. Our phone's blowing off, not at the current moment. I mean, we do see a lot of people that are reactivating their pre-approvals that were previously, you know, uh, put to the wayside, but now with interest rates dropping, inflation cooling to 2%, this week has been a little bit interesting because yes, the US Fed cut 50 basis points. So a lot of our clients that have renewals, that have deals in the pipeline, they're calling in because they're asking about lower rates, right? So as these bonds continue to drop and level off, we are going to see some interest rate reductions in the next 3, 6, 12 months.
So buyers that have, you said that they have deals in the pipeline. So they're calling to say, hey, rates went down a little bit. Does that affect the mortgage I'm applying for? Right? They're trying to get a slightly lower rate than whatever they had, right? But they're already in the system. Like even if rates didn't go down, they're moving forward with their purchase. I'm more interested in buyers that have nothing in a pipeline. Like they may be shopping, but they're not going to be pulling the trigger until they see a relief in interest rates. Has so far where we are in Canada, is there an influx? Like I got to say, on our side, on the realtor side, we're not really seeing it. The rate reduction so far. I mean, when you add them all up, hey, for some it could make a difference, but individually, if somebody couldn't afford it before the most recent rate announcement, they still can't afford it after the 0.25 basis points drop. That's what we're seeing on our side here.
Yeah, as far as newer buyers, you did basically isolate that. I don't think there's a lot of activity for like new first time home buyers. Some of the buyers that we are seeing that are coming across our desk are move up buyers that are definitely seasoned a little bit. They're looking at their options. But when it comes down to the interest rate, yes, if the rate was a little bit higher, we were just in the fives not too long ago. Most rates start with a five. Now, pretty
Yeah.
much every single rate starts with a four and in the mid fours to low fours. So we are definitely, the pendulum is swinging. This is something that is really important for a lot of first time home buyers because a lot of the ones that we're talking to, I mean, they're reaching out to us with this feeling that there is the correlation between interest rates and home prices. So a lot of them are trying to front load the market. They're starting to get out there to look at homes before interest rates get a little bit lower. And I guess what they're saying to me is the FOMO, right? They're worried about the influx of people, and they want to get into a certain style or type of home with less competition because they need conditions of financing. So when there's less people in the market, they have more opportunity to put those conditions in.
Well, right now there's a ton of properties out there, more so than we've seen in a long time. In the condo market, we've never seen this amount of condos available for sale. Never. In the resale, I can't say that with complete confidence that we've never seen this amount of properties for sale, but maybe we've never seen this amount of properties for sale. And every buyer wants to buy at the bottom. That's the goal. Buy at the bottom. And in my last show, my Toronto show, I showed everybody a chart. Look at the history. Now, I went back 5 years, and the fewest sales in the cycle were when prices were the lowest. The most amount of sales in the cycle are when prices were the highest. So although every buyer wants to buy at the bottom, somehow, some way, the way it works out, our most sales happen when prices are the highest.
You bring a really good point, Santo. Do most buyers want to wait until everybody else is buying so that they feel they have this confidence to buy? The sentiment has changed. Is that what they're looking for? That paradigm shift in the sentiment? As you mentioned, I mean, when the prices are down, the old adage with Warren Buffett, right? When the market is fearful, you should be greedy. When the market is greedy, you should be fearful, right? And there's no really right or wrong answer. I do notice the same thing. It's like when everyone's buying, it's like all of a sudden everyone's applying for a mortgage.
And that's when prices are the highest.
It's supply and demand, right? The
Yeah.
more people out there. And it's funny because you said buyers want to buy at the bottom, which is absolutely true. I mean,
But they don't. This is what I'm saying.
and that individual becomes a seller, they want to sell at the top, right? So,
Right. Right. Well, so with the same thought that buyers want to buy at the bottom, but they don't. They don't want to buy at the top, but they usually do. And I'm just going by stats. That's the way it actually works out. Whether they want to or not, that's how the numbers work. I'm looking at the Feds in the US dropped 50 basis points. There's already been a lot of chatter about, oh, are we going to drop 50 basis points on the next announcement? When's the next announcement? In and October 23rd. And I could see buyers pulling back now and thinking, oh, I'm going to wait because this is what's happened already when we started dropping rates. Sellers excited, came on board. Lots of listings came up. We saw the spike in new listings, but buyers haven't shown up to the party yet. And so their attitude seems to be, maybe I'm wrong, but seems to be, oh, since we've started reducing rates, I'm going to hold back because there's more rates coming. And now with this carrot dangling of maybe 50 basis points, since Canada's already on a roll with reducing rates, they're thinking, why should I buy now? They're looking at that. And however, sellers are thinking, yeah, prices are going to go up because rates are lower. None of this has been proven in the market yet, but this is kind of what's happening out there. So
I definitely agree with you. Just a quick side note on that. I mean, you did touch on the US cutting 50. Canada's already cut 3 times. We've cut 3 times ahead of the US.
well, everybody's forgotten about that. Everybody's forgotten about that. It's the next one's got to be 50 for Canada. They don't think we're already 3/4, ahead of the States. They don't think about that anymore.
I always say that we have to be very cautious what we always have to be careful what we wish for, because as I said, even when the US Fed announced, the markets were waiting to digest that, because there's a difference between a good 50 basis point cut with no recessionary fears versus a 50% cut to get ahead, proactive versus reactive.
Thank you. Thank you. And so I don't want to be a conspiracy theorist, but it's not like house prices. It's not like home prices are so low now that the government is fearful of everybody losing their equity. It's not like there's mass power of sales going through the bank. It's not like the vast majority of homeowners are in trouble. We seem to live, you and I, more so me than you, we're in real estate. So everything is revolved. Something happens, gas prices go up. I'm thinking, oh, how's that going to affect real estate prices? Price of eggs goes up. How's that going to affect real estate prices? But the reality is the Fed's Bank of Canada, their whole universe doesn't revolve around real estate prices and home prices. They've got the rest of the economy to worry about. So I do wonder, why are we reducing interest rates? I do wonder about that. And I'm by no means an economist, and my universe is real estate, home prices, buying and selling real estate, helping people buy and sell real estate. A big part of your life, mortgages, helping people to buy real estate by getting them qualified for mortgages. Home prices are still high. So yes, interest rates are coming down. Why? Why are interest rates coming down? That's the big question. Is there something else going on that we don't know about, or is not being spoken about, or are they trying to, fight off a recession, like you said? This is what's kind of on the back of my mind. And one of the latest inflation announcements was that we're at 2% now. Was it 2 or 2.1%? We're at 2% now. And I don't want to be a conspiracy theorist, but it doesn't feel like 2%. And it just seems, wow, that was pretty quick. And we were so bad not too long ago. And now, man, everything's under control. And it seems that the rest of the world is still, in big trouble. I'm thinking, is that a real 2%? Is that real? So I don't know. What do you think?
Well, a lot of things to touch on there. I mean, when you think about Stats Canada and their reporting of the inflation, I mean, you're right. I mean, they can manipulate the buckets of how they deduce inflationary numbers, right? They can look at those numbers and strip out the most volatile things like food and energy. I mean, food and energy is what we need to survive, right? We need our food, we need our energy to power our cars and heat our homes or cool our homes. As I said, I'm not going to get into that conversation around Stats Canada, but I mean, look, inflation all of a sudden, yeah, it dropped down to 2%. Do we have other fears that linger behind that? Deflationary fears? What happens next? But like as you mentioned with the market sentiment, I believe now that inflation is starting to cool, the timing of everything that is sort of unfolding, right? With the cuts, with obviously we'll get into talking a little bit about the federal government making these big monumental changes to amortizations, to extending CMHC insured default mortgages. What is the backstory here? What is the timing? I mean, Canada is a housing economy. And I hate to say it, we have manufacturing, we have housing. Your job, my job, a lot of people's job, construction jobs in this country rely on housing. And when
Yeah.
the housing sector seems to be taking a significant step backwards, like you said, the Fed has to jump in and say, they have to control the broader economy. With one stroke, they can control monetary policy. It's the fiscal government responsibility to control individual segments of the market. Are they impacting foreign buyers, aging population, young Canadians? The Fed can't, the central bank can't do that. They can just change monetary policy that will make things better for some and worse for others, or worse for others and better for some, right? So
Right.
this is literally the conversation right now. I said, I'm not a conspiracy theorist. I mean, most people probably would agree with you. And there's something lurking behind the scenes right now.
Okay. Well, it seems to be, with the lower interest rates and these other announcements we're about to talk about with the insured mortgages and 30-year mortgages. We'll get into that right now. But it seems to be happy days are right around the corner, it seems, with all these announcements. Anyways, let's get into the next part of this. So, the $1 million price cap for insured mortgages has been increased from 1 million to 1.5 million. This is effective December 15th. So in other words, anything that you purchased above a million used to be minimum 20% down. Below a million, so 999.99, you used to be able to get away with less than 20% down. The whole point of this was to help the first-time home buyers, to help people new in the market getting into, or people going from condo to, say, an entry level freehold. Anything under $1 million, you didn't need 20% down payment. As of December 15th, that'll change. They've moved that post from 1 million to 1.5 million. That's a big step. That's a big step. So now we're looking at up to 1.5 million maximum. You don't need 20% down payment. So on one hand, wow, people with, less down payment. When I say less down payment, what are we, in most cases, you're the mortgage guy, what are we talking? We're not talking about 5% down. Like, what are we talking?
Well, generally, it's true. I mean, now that they're moving the needle from 1 to 1.5, the rule is the first 500,000, up to the first 500,000, you need 5%. So that's the bare minimum in Canada, 5%. From 500 to 1 million, it's 10% of anything over and above that 500,000. So basically, you could get away with buying with as little as 75, less than $100,000. I mean, that's the bare minimum, depending on the purchase price. What we don't know right now, unfortunately, as the data rolls out, we'll find out more, but what the cap or the sliding scale will be after the $1 million mark. Will they be making any changes to that? Will it be 15% of anything over $1 million? Or will it be, who knows? Will it be 20% of that amount? Like, we don't know. I mean, obviously they haven't released any of that data, but generally, like you mentioned, you had a hard stop for buyers. If they wanted to buy an insured property less than $1 million, they could buy with less than 20% down. As soon as you went past that $1 million mark, then you needed $200,000. Now, for some first-time home buyers, this is a level playing field. For individuals that are looking at these opportunities. But once again, who stands to benefit here, right? And then obviously the amortizations.
Well, so that's one thing that's happened. The next part of that announcement was they're expanding eligibility. Used to be 25-year amortization. Now they're expanding it to 30-year amortization. So we're going to allow you to buy for more with less down, and we're going to spread that payment over a longer period. Sounds like to me, monthly mortgage payments are coming down and they're going to last longer. That's the way I'm seeing it. They're coming down and they're going to last longer. And for sure, it's going to help a lot of people out. But I can't help to think, and it's only because we see it over and over again. When the last peak that we had there, 2021, 2022, when interest rates were nothing, and home prices went through the roof, many of the buyers, their attitude was, I don't care if the house is 3 million, 4 million, 5 million, as long as monthly I can afford it. There was the intention of actually paying off a mortgage just wasn't there. It was all about actually buying the mortgage and you got a free house with it. And it was about the monthly payment. And those are a lot of people that got themselves in trouble when things turned, when interest rates started to go up, when home prices came down, because it's cyclical. I mean, real estate is not a guarantee. And especially if they're looking at it as an investment, as many people do, well, then you got to take everything that's part of an investment, and there's risks. Well, so now it seems to be they're allowing newer buyers to, there's more opportunity for them to get themselves stuck, is kind of the way I see it.
I agree. I definitely agree with that. I mean, ultimately, a 30-year amortization just kicks the can down the road. Higher interest costs. The banks tend to make more money. The insurers potentially tend to make more money. But once again, it's a double-edged sword, because I've worked with a lot of clients that they wish they would have had a 30-year amortization because they could have qualified. and that would have helped them get into a home with a growing family and the need to purchase because they just couldn't find anything to rent, or they just didn't have that mindset.
Well, they feel in rent they're throwing their money away, right? They're helping somebody else build equity versus themselves.
Exactly, and then they said the 30-year amortization, that was something that was already offered on the conventional side of mortgages. So if you were putting the 20% down and you were going through your mortgage process, you were given that extra perk, right? That sort of you unlocked this extra 5 years that you could save yourself some monthly cash flow. Your carrying cost just becomes less. It doesn't mean that your mortgage is less in the long run. It's actually more, excuse me, in the long run. But it does allow a lot of individuals to have the opportunity. This is where sort of I balance, I look at myself and say, okay, well, I know some clients that would really benefit from this. And they are prepared, they're willing and able to take on the 30-year. But then there's the unsuspected people that, how they'll still perceive all this and they'll just get themselves, as you said, potentially into trouble. Because once again, they buy the payment. They don't buy the home, they buy the payment. What does it cost me per month? And I think over the last few years, like when we were on the episode a while back, I stated Canadians learned a valuable lesson. I mean, over the last few years, like you mentioned with real estate, not only doing one thing, it doesn't always do one thing. It could obviously change, but for individuals looking at the overall picture right now as a first-time home buyer, it seems very promising, right? This is something that's going to move the needle because, like you mentioned, we talked about earlier on, you have different segments. Previously, up to $1 million, 30-year amortization, you had a very large pool of buyers. You had buyers that were less than 20% down, and then buyers that had 20%. And as soon as you crossed over to that $1 million mark, you had less potential competition in the market because now everyone in that market had to have 20%.
And I guarantee you, it affected home prices in that area there. If your home's value was around $1 million, you're right. Fewer potential buyers at $1,001 versus $999, and it affected home prices in that space there. That just those hovering around there.
It does. I mean, it's going to move the needle. I personally think, like as you said, that you've pointed it out. I mean, consider ourselves pretty, informed with what's happening. I've been doing this for long enough to see trends and spot them out and say, hey, every time something like this happens, you sort of see those price points push up a little bit because now think about it as a seller, right? Let's say you're a seller now. All of a sudden, okay, December 15th rolls around. My house price is just at $1 million. Now, not only I don't have to really worry about trying to keep it under $1 million, I can price it over $1 million if it can fetch that value, obviously, because now I have everybody that's going to be able to chase after this home.
Yeah, and I could tell you from experience, we've had homes in the past priced at about $1 million, just over $1 million. Let's say it's at $1,025,000, and we've received offers at $999,000, and we're told from the buyer's side saying, "Look, that's the absolute most they can pay. They can't put the 20% down, so you either take $999,000 or we're going to move on." And if we're sitting on the market and we're not getting a ton of showings, and the seller has pressure to consider the $999,000 versus a bit more, but all that's about to change. December 15th, that's about to change. So sellers are going to say, wait, put in an offer now, but closing after December 15th.
Well, that's the thing. I mean, right now, are we going to see an influx of individuals trying to rush to the market to take advantage of, like this potential opportunity? Because there's a lot of clients out there. I mean, like I said, like with the qualification part of it, to get an insured mortgage, it doesn't. A lot of reviewers may have this presumption that just because you're buying with less than 20% down, I mean, it's a rigorous process for individuals to qualify for insured mortgage. It's not a walk in the park. There's no exceptions when it comes to ratios. It has to go through two sets of eyes, not only the lender but also the insurer, right? Because of the fact it was 25 years, they had to qualify and lower payments. So the income required for some of these deals had to be significant. So I mean, that's going to be still an ongoing process, because to get over $1 million now, you're going to need just $1 million mortgage. You're going to need over $230,000 of combined family income.
Okay, so thanks for bringing that up because I often hear comments on my YouTube channel. Who can afford to buy today? Who can afford these home prices? Yet I'm working with buyers. I'm not talking necessarily about move up buyers. I'm working with those, but I'm working with first time home buyers. I got to tell you, they're not all money's coming in from overseas. It's not that. They've actually, on their own, husband and wife, boyfriend and girlfriend, they're qualifying on their own. Who are these people? What do they do? How much do they make?
I can tell you something from when I was in school. The financial literacy amongst some of the younger generations is a lot better. A lot of them are invested. A lot of them understand how money works. Um, but a lot of them are young professionals. I mean, think about it. And we want to say conspiracies. I mean, look, let's look at the government. Private sector lost 40%, but the government sector gained 40%.
So 40%.
Government jobs, sector jobs, right? So the private sector lost, public sector gained. Think about it, I have a lot of clients, two teachers, a teacher, a police officer, fireman, a paramedic, someone who's working.
Well, many of those that you just mentioned, teacher, paramedic, firefighter, they're over $1 million. Sorry, they're over 100,000. I mean, yeah. So together, there's 200, 2 to 250 together. You're right.
I mean, as I said, easy. It's an easy.
Yeah.
We're not. It's not like when you mention that point and sort of strikes a chord with me. Is who's buying it? There's people buying it. There's a lot of qualified buyers out there.
Yeah.
It's just
And
a
that's
lot, right now. They're just waiting. They're ready to pounce, I think.
yeah, and that's what I see. I read my comments. Who's buying? And I look at the people that I'm helping buy. They're not millionaires. They're not. They've got what we would consider regular job. It's not like a teacher or a government employee or some of these other jobs that they're not necessarily fancy big shot type jobs. They're just regular type jobs that a lot of people have, and yeah, they're at 100,000. Anthony, these are all great points, and I don't want to come across as cynical and negative. With all these announcements, we're talking in general interest rates coming down with the seems like a high potential they're going to continue to come down. That's one thing happening right now. The other thing is the amortization being moved to 30 years and the eligibility for insured mortgages moving to 1.5 million. The banks are going to benefit hugely. Home builders, I know a lot of these announcements, it's to incentivize home builders to get back out there and start building because we're nowhere near any kind of home building goal that we've set in the past. So home builders stand to benefit. But you know what? So do the buyers. Lower interest rates, buyers can benefit from that. You can't have only good. There's going to be good, there's going to be bad. For sure, some buyers are going to take on higher mortgages than maybe they should. But you can't just have it one way where, it's only good for one specific small little sector. So yeah, people can afford to buy a more expensive home now because of this, and banks will be benefit. But how do you do it without, putting in the good, the bad altogether? I think it's very positive what they're doing. They are stimulating the housing market. What you said right at the beginning, we are a housing economy, and it's a big part of everybody's life.
Santo, you hammered a whole bunch of really good points there, and I think the thing is right now with these changes, obviously the timing is the concern. There are ulterior motives. The other thing too is anybody can nitpick out of this, good and bad between adding the 30-year amortization, $1.5 million purchase price. I mean, look, it is something that being in this industry as long as I have, it's always been regulation and legislation that's been against the first-time home buyer. In the guise to protect them, they've made it harder to qualify. This is the first time I've seen in many, many years that they're making it easier. Okay, so obviously there's something there that they're they're trying to address. There's multiple forces at play, like you touched on. We have interest rates, we have inflation, all of that, those pressures pulling back, right? As you said, happy days ahead. Now you have this potential for administrative changes with insured mortgages. That's going to drive potentially first-time home buyers. So the way I look is you have two knock-on effects on housing right now.
Yeah.
Like we have two huge tailwinds pushing home buyers to potentially come back to the market to help maybe bail out, as you said, the builders, the government. I mean, think about it. CMHC collects higher, the Canadian Mortgage and Housing Corporation, SIG, and Canada Guarantee, the insurers, they stand to make more money. The government and municipalities collect more taxes on land transfer tax changes. The more transactions that transact, the more money they make. The banks are going to make more money on interest. You know, the real estate and mortgage industry stands to profit as well.
So home buyers, they can benefit from this, but it's not for free. Absolutely. Absolutely. Hey, as always, we're going to see what happens and we're going to react and we're going to adapt to whatever the new world brings us and whatever the situations are. But there's definitely going to be a lot more buyers being able to take advantage of this. And if that's the case, for sure, it's going to affect home prices. If more buyers jump on board. Yeah.
Everybody has a choice in life to make, right? You know, that's
Absolutely.
the reality. It's we've always been, and you know, working together with you. We've never pushed anybody and said to people, "Hey, you need to do this." We're not TikTok people, you know, and you need to do this right now. No, when you're qualified, you're ready. You've budgeted. You've made your decisions. You know, you understand the risk and reward of what you're about to do. It's your choice. No one should ever put a gun to your head and say you need to buy a house now or XYZ.
You lay it out. These are the numbers. You do what makes sense for you and your family. Anthony, thank you for sharing this time with us. Appreciate it. Anthony's contact details will be in the description below. It's Anthony with InTouch Mortgage Solutions. Even if you just want to ask questions, give Anthony a call. Thanks. Have an awesome day, buddy.